Good morning, traders from whichever side of the country you're watching me from. Welcome to today's morning market call. My name is Ian Joseph, market analyst at HFM. Quick disclaimer before we do begin. The information herein is only meant for educational and informative purposes only. None of it should be construed as investment advice. Trading the financial markets do carry a degree of risk. But do not worry, I'm here to help you look at the market the right way. We are going to start off with a shout out to Kenya Stars. Thank you for being the first one to join the morning market call. Now, we have the Shield 500 accounts being launched, and this is a very interesting account for you as a trader, whereby if you do open a trading account within the first 10 days, you are eligible for the Shield 500. Now, an interesting thing about this account is that if you deposit anywhere between $100 and $500 and you incur losses within the first 25 days, we will refund you up to $500, meaning technically you're going to be risk-free trading with this account. Once again, it is only eligible if you open an account within the first 10 days after registration. How do you go? You have maximum protection over $500 that we can refund to you if at all you do decide to blow your account. How do you join it? Step number one, you open your Shield 500 account, sign up in minutes through the HF platform. You can go using whichever browser of your choice, or you can download the application from Apple Store or Play Store. Deposit at least $100, fund your Shield 500 account within 10 days after activation. Within the first 25 days, whatever losses that you incur, we are going to refund you the full amount. Technically speaking, you're going to be trading on live market conditions, risk-free. Get covered, get trading. Not only that, when you go over to our platform on the promotion segment, we also do have Battle of the Elite round number 2 currently ongoing, whereby you do have an opportunity to become Kenya's Don Wabiz. Claim the crown, win 650,000 Kenyan shillings. Number 2 is going to walk home with 260,000 Kenyan shillings. Number 3, 130,000 Kenyan shillings. We're going to have 10 winners in the lucky draw, walking home with $200 each. How do you join? You go over to your HF under the promotion segment, join Battle of the Elite round 2. Deposit at least $100, trade in your asset. Looking at the leaderboard currently at the moment, we do have number 1, Caruduor, with a 282% profit. Number 4 has only 31% gain on the account, meaning if you do open this account today and you make only $1 single, you are going to be on the leaderboard. That aside, let's go over to the morning market call, whereby you know how we always begin our journey. We are going to start with what is happening currently at the moment. It is earnings season, whereby we are anticipating earnings from major companies. Looking at today, we are going to have earnings from HSBC. This is going to come out before market open, whereby we do anticipate their earnings per share to come out at around $1.41. Quite interesting. We're going to have BNP. We're also going to have Abanola, Bookings, Visa, and then the day is going to be concluded. Tomorrow is going to be very active, whereby we do have earnings from Adidas, Santander, Mercedes-Benz, Douchebag, Caterpillar, GSK, Boeing. But the key highlight I would want us to focus on is Microsoft, who's going to release their earnings after market close. Quite interesting to note how the markets are going to prepare for this. And very interesting thing to note, remember today is Tuesday. This is the final trading week of the monthly candle, and we want to look at the charts. What does it mean for us as traders? How are we going to utilize these opportunities? How are we going to find probabilities to make money in the markets? Going over to the economic calendar, yesterday we didn't have a lot of activity, it being a Monday, but today we do have quite a bit of activity in the next 1 hour, 56 minutes, and counting at exactly 11 a.m. East African time. We are going to have the ECB bank lending survey. We want to look at what these banks are doing in relation to each other, their ecosystem. How is Bank A lending to Bank B? And this is going to have an effect on the euro, understanding how money basically is moving. Now, starting tomorrow is when we are going to have major news releases, starting with the Australian dollar releasing their consumer price index numbers. And then later on in the day, we are going to have Bank of Canada releasing the monetary policy. And I want us to look at this particular aspect here, whereby the current interest rates is at 2.5. We do anticipate Bank of Canada to lower their interest rates tomorrow by 25 basis points to 2.25%. Then the Fed Reserve are not going to be left behind, whereby we do anticipate anticipate a 25 basis point cut also from the Fed Reserve, whereby currently it's at 4.25. We do anticipate the numbers coming in at 4%. Quite interesting. And we want to look at this information. Now, switching gears to the charts. Before we do head there, a quick thing I would want to point out is that we are currently in no DST at the moment, meaning markets are going to open at different times. Currently, at the moment, Frankfurt, Germany is going to open at 10 a.m. They're going to close at 6 p.m. London session opens at 11 a.m. They are going to close at 7 p.m. Now, New York session is the final market that will and DST, and this will be on 2nd of November, whereby currently at the moment they are opening the markets at 3 p.m. But from 2nd November, they are going to start opening the markets at 4 p.m., meaning all of the news releases, whatever we look at in terms of time-based, when you're looking at the CPI numbers, when you're looking at inflationary numbers, when you're looking at the NFP numbers also, if it's going to be released, the clocks are going to be moved forward by 1 hour, which is very important for us as traders to keep a keen eye on. I would want us to go over to the most important part of our segment, whereby we look at the charts, we look at the markets, we look at price action. It's a chart of price against time. We ask ourselves, how are we going to find opportunities in these markets? Yes, we do anticipate a bit of activity happening, but what does this mean for me as a trader? And I want to start with gold, whereby God's money has been very interesting. Looking at it from these highs that we did form on 20th, we have seen gold move almost 10% to the downside in less than 126 hours of trading. Quite interesting. But if I can go to the daily time frame, and I want us to look at this price action, ever since the year did begin, gold has been very, very bullish. Ever since this period here, in less than 1 year, we did see gold move almost 65% to the upper side. Quite interesting. This is one of the best gold runs that we have ever seen on the precious metal. Just Les Boy wants us to look at GU and UJ. We shall look at that in just a few moments' time, whereby we have been saying, now this is quite interesting. If I can bring it into perspective, this was January, and back earlier this year, we did say Trump enact the tariffs, and the institutions, the markets, investors were very cautious about it, and we did see gold rally to the upper side. But it reached a point whereby the market started realizing, okay, maybe this is just Trump being Trump, and the markets entered into a period of consolidation for quite some time, whereby I'm looking at the daily perspective. We did consolidate for more than 70 days. I do remember on the precious metal. Then came about another set of tariffs, whereby we did see gold now move quite aggressively to the upper side. Ever since this period here, we did see gold move almost 30% to the upper side. Now, if institutions bought below, the goal is always to buy low, sell high. Institutions did buy low. The markets have moved to the upper side. Now it's their turn to start taking profits off the table. Their positions are currently netting them quite a decent amount of returns. Now, whenever institutions start to offload positions, this is whereby we see the markets now start retracing to the downside. Why? Because if you buy, you have to sell back into the markets to make a profit. Now, the question right now is that could this be a short-term retracement whereby institutions are driving prices to the lower side to get a much better entry for a continuation to the upper side? Now, remember, we are heading into winter, we are heading into festivity seasons, and most of the times we usually see the markets react in a very specific pattern, whereby we are seeing gold move to the downside. But if we look at equities, let's say, for example, the S&P 500, currently the S&P 500 is at all-time highs. And last week in the morning market call, we were looking at this period of 6,762 region, whereby we had identified this was the most region of resistance that we were looking at in the market. And we did speculate that if the markets do break to the upper side, now the ceiling has been broken. Where could the next place price move to? We did see prices move quite aggressively to the upper side, close around 6,793 on Friday. And then when the markets opened on Monday, which was yesterday, we did see prices gap quite significantly to the upper side, and this is the results of the earnings. Earnings are coming positively. We are seeing companies posting actually better than anticipated numbers. We are seeing institutions now move their money from safer havens into risk on assets. Currently, at the moment, we are looking at gold now being offloaded positions. Now, institutions are moving money from gold and they are pumping it into equities. For example, the S&P 500. And we did talk about this price action whereby we had massive momentum to the downside, whereby bears did try to sell the markets, buyers came back up. Sellers tried to sell the markets, buyers did come back up. Once again, this period here, sellers did try to push the markets down, but we have seen one of the best corrections on the S&P 500. What would I anticipate on price action? I would anticipate these prices to continue moving further to the upper side. Why? Because if the Fed Reserve are going to lower interest rates, it means that these equities, these companies are going to receive loans at a much cheaper price. If they do have debts currently at the moment, they are going to service these debts at a cheaper price, because if the central banks do lower interest rates, basically they are weakening the currency. If they weaken the currency, then if they're supposed to sell, let's say, for example, an iPhone, technically, if you are to sell an iPhone abroad, let's say, for example, in Kenya, if you are to buy now the iPhone, if the Kenyan shilling is stronger compared to the dollar, then you're going to require lesser shillings to buy the Apple iPhone. Makes sense? So technically, these companies are going to get much more in return when they are servicing these loans, when they are providing services. And it is good for equities because it's going to encourage more volume to come into the company. We do anticipate S&P 500 moving further to the upper side, and the S&P 500, the Nasdaq are positively correlated. Why? Because all of these, when you look at the S&P 500, most of the companies that constitute the S&P 500 are located in the Nasdaq. Now, the Nasdaq is a tech heavy, meaning they are going to rely more on tech industries. This is going to be companies like Meta, which are going to release their earnings. We are looking at Microsoft. We are looking at Tesla, who did release their earnings, and it did come out actually better than anticipated. Now, if it does continue this trend, we are seeing gold move to the downside. Yes. Why? Because institutions are removing the money from gold and they are moving it into much more riskier bearing assets. And this is seasonality speaking, whereby if you look at it historically, towards the end of the year, the final quarter of the year, stocks generally tend to do better. Seasonality speaking, it is a pattern of how human beings move about money. We do have a question from Aminsi Bouvel. How to open an account, brother? Go over to the HFM platform, whichever browser of your choice. Just type in HFM, or you can go to the Apple Store or the Google Play Store, whereby you can download the application. Then click at the top right corner. You do have the sandwich, the 3 bars, whereby if you do click on it, it's going to enable you to register for an account. Once again, go to whichever browser of your choice, input HFM, register. It's going to take you to the landing page whereby you do have an opportunity to open an account. Looking at the Nasdaq, once again, I'm anticipating prices to move to the upper side. Currently, prices are well above the 14-period moving average, which is quite interesting. If I can go over to the daily perspective, we can tell that prices are generally bullish. Prices are well above the 14-period daily moving average, considering everything that's happening currently at the moment. The US 30, which is the Dow Jones Industrial Average, is not left behind, whereby once again the United States is firing on all cylinders. Yes, we still do have the government shutdown, whereby there are talks of how it's gonna end. One way to find out, but looking at how equities, because the government is shut down yet, but these equities are private entities, meaning they are not going to be affected as a result of the shutdown. This is quite interesting because we do anticipate a bit of jobs to be affected. It is affecting more than 750,000 people, yes. But when you look at basically the backbone of the United States economy is built on private entities. They are private companies, and looking at it, the S&P 500 is reflecting that in the best way possible, whereby looking at January once again, when Trump did take office, Yes, we did see the S&P 500. This is the Dow Jones Industrial Average move quite aggressively to the downside. This was almost how many percent in less? This is on the daily perspective. Prices did move more than 20% to the downside in less than 45 trading days. And I remember we looked at it and considered this is a market crash whereby everything is the worst panic in the markets. But we had the best bull run we have seen in 10 years on the Dow Jones Industrial Average, whereby prices are currently trading almost 30% in less than 150 days of trading. Quite interesting. And yes, there is more where that came from. I would consider looking at more net long opportunities if prices do persist and break this region of resistance that we do have currently forming around 47,648, whereby if you do get a candlestick that closes well above this region, I would consider looking at more net long opportunities. But as a trader, you need to have the capability of looking at both sides of the coin, whereby if we do break below 47,429, there is a possibility prices will come back, retrace into these regions of inefficiencies that we do have residing at 47,247 and this region also below here. This was Friday's low that was created at 46,754 region. Now, once again, we are anticipating the Fed Reserve to lower interest rates this week. Quite interesting, noting how the United States dollar potentially could be weaker, and as a result, we might see equities moving further to the upper side. Now, not only in the United States of America, also in UK, whereby if I look at the FTSE, now the FTSE is the top 100 companies in the United Kingdom, okay? Now we are seeing the same rally happen ever since 17th of October. We have seen the FTSE gain almost 4%. This is more than 39,000 points in less than 155 hours of trading, whereby once again, companies right now are reacting to the data positively. We are heading into festivities. This is the point whereby institutions, markets, these companies are going to give it their all, and we usually see them do better compared to safer havens. Now, currently, the sentiment is moving to risk on assets. That's why we are seeing the metals lose quite significantly. Looking at silver also, silver is trading below $47 an ounce. Quite interesting. This is 3 weeks low. We have not been here for 3 weeks currently at the moment, but we are trading at $46.48 an ounce. Quite interesting. And I would consider looking at more shorting opportunities on these metals once again. Why? Because sentiment currently at the moment is very risk on. Just less boy wanted us to look at GBP USD and USD JPY. Now, looking at the British pound against the United States dollar, we do anticipate the Fed Reserve to lower interest rates. Now, price action is currently a bit choppy on the 1 hour time frame. If I can zoom out to get a perspective, we are still in this range between this high and this low. Quite interesting, whereby prices are neither making clear higher highs or clear lows. And as a trader, I want to be very cautious in such periods. This is why it's advised that you have at least strategies that will help you look for opportunities when the markets are trending and when the markets are consolidating. You need to have a basket of opportunities or a basket of rules, confluences that you're going to look at. Never have just one strategy, because the way a strategy performs in January is not going to be the same way a strategy will perform mid-year, mid-month, start of the month. So you need to have these strategies that are going to enable you find opportunities in almost any market conditions. Why? Because opportunities are always around us. The markets are always moving. Looking at it currently on the shorter time frame, we do have this region of resistance around 1.33687, and I want to consider how prices is going to react to this region. Now, whenever we have resistance forming, it means that prices try to break to this upper side, failed, whereby we are now getting signs of sellers coming into the markets. If we do close above this region, I would want to consider looking at more net long opportunities, potentially prices moving further to the upper side. But on the other hand, we are rejecting the highs that was created on the daily time frame. If I was to pinpoint the opening price of the daily candle, it is at 1.33359, which is a psychological level if you look at it, whereby if we do break to the downside, it means on the daily perspective, prices has opened, formed a high. We could now start retracing to the downside, and bears might be coming into the markets, potentially moving prices further to the downside. We are seeing 10-year treasuries on the United States bearing quite significantly. That's why we are seeing slight strength on the dollar, and we might anticipate GBP USD moving further to the downside if the yields continue to make better returns as a result on riskier off assets. Currently at the moment, if we do break 1.3359, I will consider looking at selling opportunities, potentially prices coming back to 1.32870. Quite interesting. This is a very decent tradable range in the markets, whereby yes, if we do break to the downside, this is almost 50 pips in the markets. We do have a question from Tyson Gusso. What strategy are you using? Now, about strategies, let me tell you something very interesting, okay? Every strategy does work, okay? Every strategy on earth does work. Why do I say this? I can give two people the exact same strategy, I'll get two different results. So does that mean the strategy doesn't work? No. The most important thing is how, Tyson, you apply the strategy. For me personally, I have two main strategies, okay? Now, the first one is based off fundamentals. I'm a fundamental trader. I'm a long-term trader. Basically, I look at data. I look at interest rates. Let's say, for example, we are seeing the Bank of Canada to lower interest rates in the near future. So this means that, okay, we are anticipating a weaker Canadian dollar. For me as a trader, I want to consider selling the Canadian dollar because of what? Fundamental news releases. Then I do have an SMT money technique that I do execute on the markets. Basically, I'll be looking at regions of liquidity. Let's say, for example, 1.33687. I want to look at how prices are going to react to highs and lows. Why? Because I do believe money looks for money. Money moves from regions of liquidity to regions of liquidity. So if we do break above this region, it means that, okay, prices have broken a region of resistance. Potentially, momentum is to the upper side, and prices could be headed to the upper side. If we do break the opening price of the daily candle, it means that, okay, sellers could have momentum and drive prices further to the lower side. You are a swing trader, brother. You and I are the same. We are like-minded people. Birds of the same feather do flock together, and I'm using technical analysis. Beautiful, Baba. I do appreciate that. Thank you for being in the stream. Now, I want to look at Canadian dollar against the Japanese yen. I want to focus, okay, that was GBP USD. Sorry, before we go over there, just Les Boy wanted us to look at USD against JPY. Now, if I could scale out my chart a bit, and I want to start from this region here. Very interesting region. Now, this was the weekend. I do believe this was the closing price of Friday earlier this month, whereby, earlier this month, this was Friday. Then over the weekend, we had Japan having the elections, whereby Takaichi was sworn into seat. Now, when she was sworn, politically speaking, when you look at Forex participants, the number one Forex participant basically are central banks. Institutions, investors usually take note of politics, and sometimes when there is uncertainty in the markets, investors want to take a safer route. On this particular case, we did see not only the Japanese yen, but also the Nikkei 225 on 3rd of October pump to the upper side slightly, whereby, as you can see, it did gap to the upper side, almost 3% of its total value. Now, the same thing happened to the Japanese yen, going back to USD JPY. Here it is. Now, when she was sworn into power, there was uncertainty. The markets moved to the upper side. We had a bit of correction when this was the stimulus program is being rolled out. Now, Bank of Japan, in support of Takaichi, they are going to roll out more than $92 billion into the markets. Basically, they are going to put money into people's pockets. What this means is that they are actually advocating for money to be spent, because when there is money in circulation, technically the currency is going to be stronger. When we are looking at this chart currently, we did see prices retrace to this region of interest, move to the upper side, but we are now at a region of resistance at 153.212, meaning prices have failed to break this region to the upper side. As a trader, as a chart As a forex trader, I'm looking at this pattern and I'm asking myself, okay, prices reached this point, sellers drove prices down. Buyers came back in, but they failed to break 153.212. And I'm looking at fundamentals. I'm anticipating Bank of Japan later this week to hold interest rates, while at the same time, I'm looking at the Fed Reserve lowering interest rates, meaning I am anticipating a weaker United States dollar and a stronger Japanese yen. This means if I'm looking at these charts, I want to consider looking at selling opportunities if prices do break below 151.783, potentially coming back down to 149.388, which is a good tradable range for me as a trader. If I calculate how many pips this is more than 200 pips. If I execute a 0.01, potentially I could make slightly more or lesser than $200. Potentially, I can make, if I do have a one lot size, that could be more or less than $2,000. Now, just let's go on TradingView. What broker's chart should we use? Because some open before others. Very beautiful point, just let's boy. Now, if you look at my market watch, I do believe it's visible here, yeah? Look at my market watch time. Currently, it's telling me 9:26 a.m., okay? But if you look at the time below here, can I zoom in this chart? Sorry, I can't zoom in. But look at it from my market watch up here. So it's telling me 9:26 a.m. But if you look at my local time, current local time in Kenya, it's 10:26. Now, this happens because of daylight savings time. And I did talk about it last week in the morning market call here, whereby currently at the moment, Frankfurt, Germany is now opening at 10 a.m. They are going to close at 6 p.m. London session will open at 11 a.m. and then they are going to close at 7 p.m. Now, this is very, very important, okay? Now, when it reaches 2nd of November, New York session will now open at 4 p.m. They will close at exactly midnight local time. And this is the result. So when you're looking at charts, always ensure that you're looking at a chart that has your local time or the broker's time, in this particular case, 9:27, because this is going to be the opening time of the market at that particular point in time. That's a very good insight that you have pointed it out. Now, we have a question from 21 Forest. I'm a swing trader. How can I get your mentorship? Come over to HFM. We are located at Oval Office, Westlands, 5th floor of Ring Road. Come, I'll give you mentorship. I won't charge you anything. It's paid for. I want you to be as profitable. Because if you are a profitable trader, everyone else is happy. If you make money, everyone else is happy. I won't want you to deposit today and lose your money tomorrow. I'll be failing as a person, and the business also won't be successful. It's not sustainable. That's why we go through this extent of mentorship, of educating you as the client, because we make money through spreads. The longer you trade profitably, everyone else is happy. And this is why you need to start trading Forex. Why? It's an industry of whereby if you make money, we all make money. Okay? Beautiful thing to point it out. Now, do you have any, which currency, please? Which currency are you talking about? Now, looking at USD Canadian dollar, Yolela, kindly tell me more about which currency you're looking at. I want to focus on the Canadian dollar this week. Why? I want to focus on the Canadian dollar. I want to focus on the United States dollar. I want to focus on the Japanese yen, because of the major news releases that we are anticipating this week. Tomorrow, we are going to have CPI numbers coming in for the Australian region. If I can pull up a chart of AUD USD, we do anticipate volatility on the Australian dollar against the United States dollar. This week is going to be packed. Very, very, very packed. As a trader, this means there's a lot of opportunities for you. The most important thing you need to do is risk management. The goal number one of a trader is capital preservation. Always ensure that if you deposit money into your account, the first thing is to not lose money in that account. Okay, that's going to conclude it for me on the morning market call. If you are going to be around Isli, I do believe we are around Isli. Let me look at the name of the hotel. Sorry, we are in Kitengela currently at the moment. We are in Kitengela, the Galaxy Resort in Kitengela. If you are around Kitengela, kindly join us. We are going to have valuable insights for you as a trader. Come meet our mentors. Come meet my personal mentor. You'll know him when you do see him. That's going to be it for me. Take care of yourselves. Stay safe. I shall see you in the next segment, which is going to be tomorrow at a similar time. Kindly go follow us on our social pages. Share the streams. Let's spread the information. Let's change the narrative of how we look at money. My name is Ian Joseph, market analyst, HFM, and I'll see you when you see me next.